So my one question for you today, Greg, is what are discount points? When should one use those?
Good question, Joel. So a discount point is basically paying upfront cost to reduce your monthly payment or your interest rate. So what we typically can do is we can look at and say, if you put a little bit more down, or if you pay a point, which is traditionally 1% of the loan, it will reduce your interest rate 0.25% or monthly savings. So we can say, if you pay X and you're going to save Y, we can do the math and figure out how long is it going to take to recoup your initial investment. Sometimes it makes sense. Sometimes paying upfront cost to reduce your monthly payment and you're going to keep the loan for 5-10 years, it does make sense. Sometimes the lender or the servicer is making a bunch of money by taking that upfront cost, and really you don't see the monthly benefit.
So if I understand correctly, you probably shouldn't purchase points up front if you think it may be a shorter term loan, maybe 5 years or less.
We can, again, it's going to be typically math that we do. Right now with rates where they're at, I'm not typically advising my client to spend anything more on points than they feel comfortable with, because I do think that they'll be able to capture a refinance within the next 18 to 24 months.
That totally makes sense. Appreciate your time today, Greg.
Thank you, Joel.